losing population, no matter how wealthy you are, your country's a mess. Keep going, please, Sarah. Thank you for all of your skillful handling of me. Now, look at this, ladies and gentlemen. This is one of the most important slides. These are the 5 things that are going to tell you when we've reached the bottom. Number 1, you need this monetary policy to get traction. Interest rates are coming down here. What were they, 17%? Now they're 12, something like that. 10-year. Interest rates are coming down here, but you need to be able to get the money. That's part 2. That is, the credit needs to flow. Number 3, you need to stop losing jobs. Number 4, the house prices need to stop going down. And number 5, the profits need to get better. This is for the developed economies. There's a different list for emerging economies, okay? But they relate to this. High yield spreads. This shows that junk bonds and emerging market bonds are very high because people have lost, they're afraid of risk. And the circle on the right is the default rate. And you better prepare yourself for defaults in the U.S. corporates and in countries this year. You will see countries default. I don't know which ones they are, okay? Maybe the rating agencies do, but there will be country defaults and company defaults as this year goes along. That's why we do not think the bear market is over. That's one of our conclusions from today. Next slide, please. This is gold price. Everybody should have a little gold in their portfolios. 1%, 2%, 20%. Every one of us in this room has a different gold stability factor. It is a form of financial Tylenol, okay? It is something to calm you down so that when your good portfolio is going down, you don't panic and sell the portfolio. We are a little bit worried that the gold price is going straight up. It means that people are losing faith in paper. Okay, thank you, Sarah. Keep going, please. What may happen? Okay, now we conclude. Keep going. You see political and social effects. That's the last circle here on this slide, political and social effects. 12 days ago, 2.5 million people in France went on strike. The train drivers, the police, the teachers went on strike. And you're going to see a lot of social unrest. But the folks in this room who went through the 1970s, you've seen this before. This is a generational convulsion. That's all it is. And the people in here who have not seen it, it's your opportunity. Okay, this is your opportunity. Now, the most important line on this whole thing
meaning it's long and it's deep. 10% probability that it's a Japan-style recession, meaning for the last 8 years. 10% probability that it's a Great Depression, and it's going to go down even much more. And 10% probability that there's a recovery. That's our view right now. There's a recovery by the end of this year. So that is our probabilities.
The essence, the base case for us is that this is a 2 to 3 year recession, not a 15 to 18 month recession. Keep going. More. More. Keep going, Sarah. Now, this is our conclusion page here. It's not over means that the bear market is not over and the recession is not over. Therefore, it's not time to take on a lot of risk just yet. But we also remind, especially the young ones in here, that it's not the end of the world. Okay, this is creating great opportunity. When stocks have dropped 50%, see, we went from about 15,000 on the Karachi index down to 4,900 or something like that, and now we're about 7,000. Am I right? Something like that. So when you've seen stocks drop by 50% or more for good companies, do not sell. Hold them and close your eyes and forget about it for a few years. Couple years, 5 years, but you'll make money out of it when they've already dropped 50%. More, please. This is in your handout. You'll see our economic forecast. Where are you going? Where are you going? You're leaving? Okay, keep going. More. More. Now this one is in your handout. This is the U.S. stock market. You see 1982 all the way up to 2000. Then it drops from 2000 to 2003. It makes a bottom at the same time as the U.S. invasion of Iraq. Then it starts to go up. It reaches a peak in 2007, and look how fast it's dropped off. Now it's come back to the long-term trend. To the long-term trend. If you let your eye look at 1982, but bubbles when they burst overshoot to the downside. So we don't know whether it will, how much further it will go below the trend line. More. Look, this here, the top line is important for Pakistan. Every country has these 6 issues. Healthcare, H. Education, energy, environment, the 3 E's, and infrastructure and immigration. Not that Pakistan is receiving immigration, but it's sending immigration. Those are the 6 issues that every country faces. And I think one of the mistakes that we make as parents when we're raising children is we let the children believe that their vices, that their mistakes are theirs alone, and their virtues, their good things, everybody has. When we should be teaching our children that their vices, everybody has, and their virtues are theirs alone. And the same thing goes for countries. And so right now in the United States, we're saying, oh, we're a mess. And China's going to take over. Okay? People told me in the 50s that Russia was going to take over. And then they told me in the 70s and 80s that Japan was going to take over. And we just got to realize that many times our national strengths are ours alone, and nobody has those. And our national vices, everybody has problems. Go 2 more. Go 2. 1, 2. You see these 11 people? Does anybody know who these 11 people are? Those are the founders of my